There's a great fact that says something like 13 gigawatts of new capacity were added when we shifted from first generation of compute to the cloud. They forecast something like 38 gigawatts of new demand with the shift towards generative AI.
Yeah.
And so I think about, where is that going to come from? Well, certainly, hopefully it comes from renewables, but obviously with the intermittency of renewables, you're going to need a lot more storage. And then there are things like long duration energy storage, which are places like New York City, where you're really dependent on, natural gas to heat you during the winter. We're going to have to figure out if in fact we electrify and where we get that long duration energy storage from.
Hey, climbers, welcome back to another episode of Climb by VSC. I am Jay Kapoor, general partner of VSC Ventures and co-host of Climb. As our regular listeners know, at VSC Ventures, we spend a lot of time thinking about how to decarbonize legacy industries, your building materials, your food supply chains. All these things that are coming into the forefront as we talk about decarbonization. That's why I'm thrilled to have on Micah Kotch, partner at Blackhorn Ventures, a fund that invests in companies looking to change how the world uses resources. I pulled that from your website. So, Micah, thank you so much for joining me on the show.
Great to be here, Jay.
Awesome. Well, so we're sitting here a few days after Climate Week, so I'd be remiss not to start there. I know you were at a lot of events, you were speaking at some, you were hosting some. Now, a couple days later, what is something that really surprised you or something you learned that really shocked you over the course of that week?
Well, I've been doing Climate Week events, I guess, since Climate Week started about a decade ago. So I'm not sure that there was anything that really shocked me. I think there are kind of a couple of big takeaways for me. I think number one, there's just a really vibrant community of people who are engaged in this fight, right?
Yeah.
Investors, policymakers, founders, large corporates, like they come in all stripes. And the talent pool within this space has just grown tremendously over the last decade. So I think that's really hopeful. Right? I
That's
think
great.
there's like a lot of new perspectives and capital and people who control massive supply chains who are deeply committed, and I think who are focused on kind of what comes next, like the harder parts of their journey to net zero.
Yeah.
I do think that there's a really sobering um, realization that a lot of folks have entering this climate week in particular of just how far we have to go
Yeah.
and how much faster we need to act.
Yeah.
And so again, coming back to that first point, I think everyone kind of understands like we need to do our part, but at the same time, the leadership at the federal level, which I think we'd been missing for a while, that has now kind of stepped up and is providing some real tailwinds, but also from the private sector, needs to accelerate.
Yeah.
And I think lastly, like, it's interesting to me every climate week,
Hmm.
it feels like there's another technology flavor of the month or a different trend where you see more events that are kind of
What was
geared
what was
around
this
that.
one?
I think that energy storage has really kind of come into its own.
Really?
Yeah.
Okay.
Yeah. And it seems like, again, there's this kind of dawning realization that the amount of storage on wheels is going to dwarf the amount of stationary storage that
Yep.
we're going to have. And that fundamentally, because of some of the energy demands that we're seeing from like the shift to AI, as a for example,
Yep.
you're going to need a lot more distributed resources that are going to help to make the grid resilient.
Hmm.
There's a great fact that says something like 13 gigawatts of new capacity were added when we shifted from kind of first generation of compute to the cloud. And they forecast something like 38 gigawatts of new demand with the shift towards generative AI.
Yeah.
And so I think about, where is that going to come from? Well, certainly, hopefully it comes from renewables, but obviously with the intermittency of renewables, you're going to need a lot more
Yes.
storage. And then there are things like long duration energy storage, which are places like New York City, where you're really dependent on, natural gas to heat you during the winter.
Yep.
We're going to have to figure out if in fact we electrify and where we get that long duration energy storage from.
Yeah, I think the AI point is not to be missed. The number of climate AI conversations, panels, whole events that I had the pleasure to go to, it's really nice to hear you say that there are folks actually thinking about the energy implication of that. Because I think there's tremendous amount of excitement around, what AI can do in terms of predictive, weather and better tracking and better insurance models. And then somebody has to think about, well, Sure, but that takes 38 gigawatts of energy. And where's all of that coming from? So I think that's
Yeah.
I'm glad that that's being talked about.
Yeah. I actually think the AI theme was underhyped
Really?
this year
Okay,
during
say more.
Climate Week. Well, I just think like we are undergoing kind of a seismic shift in terms of the capability of software to really drive resource productivity
Mhm.
across really big industries that have been slow to digitize. So it's a central premise for a lot of our investment thesis, and I'll kind of walk you through some
Yeah.
very specific examples of how teams are using AI to improve workforce productivity. How teams are using AI to essentially redesign and rebuild circuit boards, which are in everything from electric vehicles to smart lighting, etc. How we're thinking about AI from a grid again, storage and EV infrastructure perspective. I just think there's a lot that's going to happen over this next several years that I think will ultimately have really big implications again in terms of the speed and scale by which we're
Yeah.
tackling this
Yeah.
problem.
Well, before we dive into that, I want folks to actually learn a little bit about you so they kind of know who they're hearing from. As far as I can tell, you've had a very non-traditional path into venture, into kind of this world of climate investing. I was looking at your background. You spent time interfacing with the public sector at NYSERDA. You spent time with the corporate world at UrbanX, which again, I know you overlapped with startups while you were there. Which of those experiences do you kind of call on the most as you are now meeting companies and investing at Blackhorn?
Yeah, it's true. I've had a very non-linear path. So
Yeah.
I started my career. I was an Asian studies Chinese major in school, and I went to go live and work in China.
Yeah.
And I came back to the States during the first .com bubble in the late '90s and started a company putting games on phones. And I've really kind of been working with founders ever since.
Yeah.
But I caught the sustainability bug like in 2003 and spent that kind of first chunk actually working for large academic institutions that were integrating sustainability on their campuses and then also in their curriculum. Helped to create this design incubator for sustainable innovation at Pratt Institute, and then I spent 5 years as director of innovation and entrepreneurship at NYU,
Yep.
where I launched a program called the Urban Future Lab and NYC Acre with the accelerator for a clean and resilient economy. And the thesis essentially was that New York City has all of these resources that should help the city become a large producer of products and services related to kind of green economy as
Yep.
opposed to just the consumer, right? We have
Yep.
more commercial real estate essentially than anywhere else in the world, some of the highest electricity prices of anywhere in the world. From a mass transit, network perspective, like there are all these great ingredients for building out a cluster here.
Hmm.
And yet, again, if you look at, 10, 15 years ago, there really wasn't a whole lot of critical mass of activity, right? From a founder perspective, from a venture perspective, from an academic commercialization perspective.
Yeah.
And so our task was essentially to anchor that. And then I left and I joined NYSERDA, which is the $1 billion a year clean energy agency here in New York State. And I did that right after Hurricane Sandy, and I worked on a $40 million community microgrid initiative called New York Prize,
Yeah.
which looked at both critical infrastructure resiliency and kind of connecting those pieces of critical infrastructure with commercial, residential, industrial loads, so that you had essentially networks of places that would be up if the grid were to go
Yeah.
down, but also even on blue sky days would be able to essentially lower their energy costs. And in some ways, that was like a Trojan horse for a lot of the utility business model innovation
Yeah.
work that I led through these Rev demonstration projects. And at the time, I worked pretty closely with the 6 investor-owned utilities here to help them to kind of collaborate with members of the startup community to run projects where um, you were looking at things like grid resilience and the expansion of renewables, but in ways that weren't rate based. And I think that's what a lot of people miss in this clean energy transition conversation is, um, the nature of the utility business model is such that they're regulated monopolies. They get paid based on a return on guaranteed rate of return on capital and the investments that they make into the grid. They don't actually make real money moving electrons across wires. It's
Mhm.
fundamentally about infrastructure, building infrastructure.
Yeah.
And so until you can evolve the utility business model, I think we're going to have a very difficult time kind of meeting some of our clean energy goals.
Ha
Anyway,
Well, I
um,
mean, on that piece before we dive into the rest of your background, have you seen any, positive sort of changes or whether it's legislative or even just like, governing bodies that have said, "Hey, we wanna take a look at how we manage the grid in this country and how we sort of, you know, change those incentives to actually get more green infrastructure built versus what they've been doing for so long."
I think generally public service commissions and Department of Public Service regulators um, are pretty arcane institutions with not a lot of um, creativity or innovation or um, an approach that is in lockstep with kind of what's happening within the startup community.
Yeah.
And I think that's a really big gating factor. I think that there are some really progressive utilities who are absolutely, engaged with founders, again, building things around EV infrastructure or, distributed systems for building decarbonization. Um, and I think that has absolutely changed. I think that there's also a dawning realization that some of the challenges to the distribution grid over this next decade or two
Yeah.
are going to require new kinds of partnerships and new kinds of collaboration.
Yeah.
But in terms of actually changing the utility business model such that investment is coming from the private sector,
Mhm.
so it doesn't have to be done on the back of the ratepayer, I think we're a ways off from
Wow.
seeing any real movement nationally or locally. I think you probably have to look to some of the munis and co-ops where it's a little bit easier to kind of deploy those new business models.
Yeah, yeah, fair enough. Sorry, I didn't mean to cut you off. You were
Oh
sharing how
yeah.
you got to Blackhorn.
Yeah, so I had this great experience working for NYSERDA with some like exceptionally brilliant people. Richard Kaufman was the energy czar at the time. Audrey Zibelman was the chair of the Department of Public Service Commission, like an exited founder. John Rhodes, who was advising the White House, was the president and CEO of NYSERDA. You just had a really like it was a brilliant kind of crucible moment, and then but I knew that, I wasn't going to pursue a career in politics and had
Yeah.
no kind of ambition to, to spend the rest of my time at a public agency. And so I was recruited by BMW, by a board member there who was in charge of all the corporate venture, digital mobility. He also had P&L for Rolls Royce, Mini, and the motorcycle division,
Wow.
and just a really brilliant guy who had enough leverage to allow us to do some really creative things
Mhm.
and had the juice to helped to create a vision for Urban X, which was the accelerator for startups reimagining city life that I
Yeah.
helped to start and ran again with a pretty brilliant team of people. We wound up investing in about 70 companies. We had 4 acquisitions out of that program, and then through that, I met the team at Blackhorn Ventures and joined them as a partner almost 2 years ago.
Yeah, yeah. That is a strong, hit rate, by the way, for corporate accelerator to have 4 exits out of 70 companies. I come from the accelerator world myself. I was at Techstars and, now Techstars has kind of gone in that route where they're doing partnerships with, Sloan Kettering and with Target and so on. There's certainly a lot of excitement, I think, from these corporates to have programs like this. They rarely, I'd say, get to that level of success. So kudos to you there.
Yeah, thanks. It's interesting, right? I think that you've seen this, but like corporates over the last, again, decade or so have come earlier and earlier,
Yes.
like along kind of the innovation chain, right? Like 10 years ago, very, very rare to see a corporate engage before Series B or C.
Mhm.
And now you're seeing corporates not only, invest at the seed stage, but again, you're starting to see them create their own accelerator programs, launch their own funds,
Mhm.
try to essentially like execute on the venture studio model and spin things out. So it's a really interesting time. And I think, again, in some of these more heavily regulated, complex industries, like in buildings or in energy, I think it's an interesting opportunity. We'll see if the corporates can execute on it.
Well, I fundamentally think too with companies in the industries that you and I look at that kind of we'll call them legacy industries. Having a design partner early, I think, has made a tremendous difference. Even when I just look at my portfolio for the folks that had that early on to the folks that eventually had to find it but didn't have it at the moment we invested, that initial customer makes such a huge difference in just, you know, helping you find that product market fit or even helping you just iterate to the point solution that you can sell today on your way to that big audacious vision.
Right.
Whereas I think founders start with the big audacious vision initially, and if they don't have somebody on the customer side that's kind of guiding their hand, it can get easy to get
Yeah.
distracted.
Well, there's certainly a lot of innovation theater out there.
Mm,
And I think what we really tried to lean into during my time at UrbanX was providing real value to early stage companies, particularly in the form of helping them with business development, helping them with product development. So leveraging, the horsepower and design and engineering that BMW and Mini brought to the table, and then helping them with syndicate building, which in our space is a pretty niche,
yeah.
still a relatively niche kind of industry. And I think if you can do that in a meaningful way over a relatively short period of time and help founders really kind of tell a story, particularly if they have some hardware, if they have a really, kick ass prototype that actually works,
Hmm.
um, then you can provide kind of outsized leverage for helping them raise their next round of capital.
Yeah, totally. So on that point of telling a story, right? Blackhorn Ventures, you've invested, I think, 60 plus companies is what I read. You joined as a partner a couple years ago. In the sea of climate funds, many of whom were here in New York last week, where does Blackhorn differentiate itself? What is the story that really resonates with founders when they say, "Wow, I want Micah and the team to be a part of my cap table"?
Yeah. Well, look, I think that we are fundamentally excited about digital infrastructure to help accelerate the energy transition. And, what that really means is capital efficient, asset light companies across kind of four big verticals that we think have been really like late to digitize, but have massive upside in terms of their decarbonization potential. So we're talking about energy, we're talking about buildings and construction, talking about transportation, and we're talking about supply chain and logistics. That's our sweet spot. And I think that in many ways, those segments are very much interrelated. Those four verticals are very much interrelated. We're also really focused on a horizontal across those four, which I would kind of characterize as workforce empowerment and
Mm,
enablement, right? So
yeah.
thinking about the challenges of how do you use technology to help augment a workforce in some cases, that is shrinking or that is being asked to do more in the field, but is really kind of the key to again unlocking the energy transition. So that's from a thesis perspective, that's our sweet spot. We're seed and Series A stage investors.
Yep.
We've been doing this for a while. Our first fund was in 2017. That first seed funds performed exceptionally well.
Right.
We had a really big exit in the EV infrastructure space called Electrify, which
Hmm.
was acquired by Ford. It's now Ford Smart Pro Charging.
Mm,
So we like the EV infrastructure space. I think historically, about 40% of our deals have touched built environment or construction. And we have some really tremendous talent there. Dr. Ray Levitt, who's one of our operating partners and former head of the construction management program at Stanford, is just like an institution in that world. Um, and I think that we we've you look across the team, we are not new to this space. So there's some real
mhm.
pattern recognition and some really
Yeah.
deep relationships with both customers and co-investors and others that we try to bring to bear for the companies that we work with. And I think we're just very focused on value creation for the teams that are in the portfolio, right?
Yeah.
So again, whether that's help building out a syndicate, or whether it's help with placing talent. We think that there are a handful of crucible moments that fundamentally kind of change a team's trajectory,
Yeah.
and so we want to be kind of instrumental for those crucible moments. And I think again, you look across the portfolio, like we are domain experts within the spaces that we operate as opposed to like a generalist climate tech fund.
Yeah, totally. Two things you mentioned there. One was pattern recognition. The other was interacting with the built environment in some way, with cities, with the grid, with real estate. Are there characteristics of founders that you've met, talking to the topic of pattern recognition, that really thrive when operating in these industries, maybe in contrast to folks that come from generalist software?
Yeah, um, absolutely, and I think that there are a couple of characteristics, generally that we look for. Um, I'll also say that I think about 2/3 of the 15 investments that we've made to date in Industrial Impact Fund 2, which is a fund that we are investing in now, um, are repeat founders.
Mm,
So either, they deeply kind of know the space that they're operating in, or again, like they have the experience of what it actually takes to build a company within
yeah.
the space. But I think these are really, again, complex ecosystems. And it's not just like the customer slash supply chain ecosystem, but there are a number of other stakeholders that I think are really, again, required for success. Um, and in my experience at NYSERDA working on microgrids, like yes, it was important to have the utility on board and technology providers on board, but community, it's like just deeply understanding like the multi-layered ecosystem in which you're going to market. I think that that um, the empathy and also kind of the data-driven quality of understanding the ecosystem in which you work, I think is critical for success in industry. Obviously a focus on ROI, but that probably kind of goes without saying, although maybe not.
Yeah.
And then just lastly, I think that there's probably a point um, for founders who are really successful in this space to have an appreciation for um, you know like getting to the next fastest learning in a really short amount of time. So like being
Mm,
able to crunch the time scale by which they can figure out the next most important thing.
mhm.
And that I think, is really about like good experiment design, and being very, again, like building a metrics driven culture,
Yeah.
and the ability to kind of communicate that both to your investors, but also to your team and your customers and others. Like I think there are qualities in that, um, in that mindset and that communication skill set that I think differentiates like great entrepreneurs from other entrepreneurs.
Yeah. It's something interesting I was trying to pick up in your answer of those characteristics here, which I think overlaps with quite a few of the founders that we enjoy working with as well, which is that customer obsession, that willingness to do what I'll say is customer research, but you've kind of defined it as ecosystem research, which I like a lot. Some of these things, they naturally map themselves to solutions that kind of exist that are not maybe novel technologies, right? In climate tech, we see a lot of stuff that is getting funded that is, lab scale, kind of on its way to commercialization, or maybe it's kind of early commercialization but hasn't quite reached product market fit. And I'm speaking in generalities, but we can talk about stuff on anywhere from the biotech side with
Yeah.
synthetic biology or enzymes that are being created, to new kinds of building materials, to new kinds of long duration storage technologies. Along that wide spectrum of things that we would consider climate tech within your sort of four categories that you laid out, what is the right entry point for you? Um, Technologies, yeah, I'll leave it at that. What is the right entry point for you to come in this world of both novel technologies and sort of solve problems?
Yeah. So we are seed and Series A stage investors,
Right.
and what that ultimately means is we like to see revenue.
Okay.
So
Yeah.
generally, there has to be either a design partner in place, or there needs to be like a product in the market that customers have said, yeah, this really works,
Yeah.
solves a big problem. I'm actually willing to pay for it. And then there's a path to a venture scale business, right? Like I
Yeah.
think that, and that's just us. There's clearly big opportunities for folks who are doing pre-seed, um, and will come earlier than us. But I think, like I say, for the most part, we are investing in founders who maybe don't fully have product market fit,
Mm-hmm.
but are well on their way because again, they've started to engage with customers and have figured out again some of these, buying ecosystems. Um, Look, as you know, Jay, like I'm a big lean startup guy,
Yeah.
and I fundamentally believe in that process of customer discovery, right? So, when I was at NYU, I got introduced and kind of brought into this NSF iCore um, program, which has just been awesome. Like if
Yeah.
you look at some of the data around what iCore has done to help commercialize federally funded research, you're talking about billions of dollars in capital raised, new company creations for things that the government had originally funded. And what we helped these researchers to do was essentially go out and speak to 100 customers over the course of 7 weeks to really kind of explore all the different elements of a business model. Because I think a lot of founders will start either with the value proposition or
Mm-hmm.
they might understand the customer segment, but they probably don't understand like channel economics, or maybe they don't understand their own cost structure, or the revenue model is iffy. And I'm not saying all those things necessarily need to be fully baked in order to go out and raise money. What I am saying though is like you have to have at least some well-crafted hypotheses that you've tested, and to have some data in terms of like what is the market saying.
Yeah.
I think that really greatly improves your probability for success, and yet founders tend not to do that. Like I think
Mm-hmm.
there's a lot of folks out there who will build the thing that they want or build the thing that they think the market needs, but when you ask them, all right, well, like how many customer touch points have you had? And like what do you actually ask those
Yeah.
customers? It's either like a bunch of leading questions or it's things that are tangential to like the main value proposition, or they're building for something that's just not replicable or big enough to be venture scale, which again, like that's fine. And it doesn't necessarily need to be. It just means that you probably shouldn't be pitching it to a venture investor who's expecting a certain return profile.
Yeah. I think one of the most harmful quotes in our industry that gets quoted entirely too often by founders is the Henry Ford quote. If I had asked people what they wanted, they would have said a faster horse. Instead I made the Ford motor vehicle. Um, I fundamentally think that is an excuse for folks to say, I don't need to talk to my customer. I'm going to feed them what I need to feed them, and they're going to take it. Um, 99 times out of 100, that's not going to be the case. And at least in my experience, right? It's you build with your customer in mind, you build with a problem in mind. And frankly, to me, as an investor, get excited. I need to hear that you are obsessed with the customer and their problem, not obsessed with your solution. Because if that's the case, you will spend more time, energy, resources, you know, brain power on the wrong thing when every market signal is telling you, hey, actually the solution I need is something, completely different.
I think that's totally right. And again, like there are these generational talents like, you know, Henry Ford and Steve Jobs and what have you, who will create the future from thin air. And then there's a lot of other folks
It's
who
not
who
most of us.
won't.
Yeah.
But you're right. I mean, I think it's interesting that every investor kind of brings their own bias or their own lens to the opportunity sets that are in front of them. And I think I'm pretty cognizant that like mine is around go to market.
Okay.
So I really want to like I want to dig into that. When I first meet a founder, like that's one of the things that I'm super interested in. It's like, how are you thinking about go to market?
Yeah. What do you think founders get wrong most of the time when they are mapping out their go to market strategy for you? What are the sort of missing pieces that you're always kind of picking up on in a pitch?
Um, well, I think that there are probably more similarities in B2B climate tech with B2B SaaS
Mm,
than a lot of climate tech founders want to believe.
okay. How so?
Well, I think that there's a lot of climate tech founders who think that they arguably have to like completely reinvent the wheel to build their funnel, um, or that things that work again for like enterprise software companies won't work for them.
Mm,
And what we found across our portfolio, and we're all B2B, right?
Yeah.
So we don't do any B2C, we don't do any B2G. But I think in the B2B space, like just we're seeing some really exceptional results from teams that are using some like well proven models for demand creation in the verticals in which they're serving.
Hmm.
And we really like vertical software, within kind of industrials, right? So we're in a company called Specifics, super interesting vertical software for HVAC data.
Yeah.
We think that's a really big and interesting opportunity.
Yeah.
And
So
and
I mean, tell me about what you think they really got right about their go to market that others can learn from.
well, so again, keep in mind, like this is a founder who helped start Redaptive, right? One of the co-founders of Redaptive, deep relationships within the industry, really, I think, understood the problem sets. It's interesting because in HVAC, the manufacturers tend to change their model and serial numbers every 4 to 6 years.
Hmm.
And so if you own a large portfolio of real estate assets and you're thinking about refrigerant compliance or you're thinking about building decarbonization, like where do you start? Are you going
Yeah.
to roll a bunch of trucks and figure out like what's actually on your roof? You're going to look at your CMMS data, which probably is going to be pretty incomplete. Um, and so this is a technology essentially that like helps to make a lot of that CMMS data that you already have just much, much more actionable
Hmm.
in a way that is a fraction of the cost and is much, much faster than you would be able to otherwise. And so, once you're, I think, once you've gained customer trust and kind of proved out a value proposition, um, from a data wedge perspective, now you can start to do some really interesting things around transacting for those assets.
Yeah.
And again, this is an industry that um, is very much kind of pen and paper and has been slow to digitize. So we think like the combination of really like deeply understanding the ecosystem, but also having a database that's been built out over the last decade or so for building HVAC assets allows them a real leg up in terms of being able to again satisfy the needs of big owners and operators and folks within in the commercial real estate market.
Yeah. And in this case, I mean, this is a business that is, interfacing with HVAC and sort of real world assets, right? And you and I were trading some notes back and forth about the Blackhorn thesis as not being software only, but software enabled hardware or focusing on that enterprise software side. So, talk to me about where you come in on software that interfaces with the real world, and then we can talk about why you feel like there's a venture scale opportunity in software specifically.
Yeah. So to be clear, so we don't invest in novel hardware,
Right.
and we think that there is a real need for that. Um, when we look at the commercialization runway of novel hardware, when we think about essentially the capital that tends to be required for new battery chemistries or fusion or kind of take your pick
First of
of
a kind
DAC or what
facilities.
have you,
Yeah. Yeah.
just not set up for kind of who we are, right? So Industrial Impact Fund 2 is a $200 million strategy. Is our third fund that we're investing in now. So at the end of the day, again, like you're looking at very, very long runways that have some. I mean, I think DAC is maybe a good example of this. A lot of uncertainty as to kind of like what is the price
Yeah.
on carbon at some point, kind of down the road, right? A lot
DAC
of
being direct air capture.
direct
I
air
try
capture.
to,
Sorry,
demystify acronyms on the show. So direct air
edit that out
capture.
later.
Yeah.
Yeah, yeah. But a lot of challenges, I think, around building integrity so that you have a good sense of how much is a ton of carbon worth based on kind of where it is and when it is it sequestered in a tree or is it sequestered in rock or
Yep.
what have you, right? So again, lots of uncertainty around that. We have a particular bias for things that can go to market now
Yeah.
and can scale really over the next 5 years because again, we both, I think, believe that immediate opportunities to bend the emissions curve have more temporal value now than they do later.
Mm-hmm.
And we have some significant ground to make up between now and 2030, and every degree matters. But also because if you look at the kind of corporate industrial buying cycle today,
Hmm.
solutions that can provide operational savings in an inflationary environment have real value.
Yeah.
And that is driving the buying decisions of the customers that our portfolio companies are serving.
Yep.
So I think that is kind of the thing that we, uh, that has to be there for the companies that we look at is there a real case to be made that your solution is creating operational savings or operational efficiency or improvements in labor productivity? Is there a customer who's actually willing to pay for that? Now, to the extent that you're creating, you know, um, emissions reduction, carbon savings, et cetera, great. It's an outcome, not necessarily an input. We think that yes, that will be able to, to be monetized at some point down the line,
Yeah.
but we don't underwrite based on that assumption.
Okay.
So impact is exceptionally important for us. Every single deal needs to go through an impact screen. We are an Impact Assets 50 fund. We're signatories of PRI,
Hmm.
the Venture Climate Alliance we're part of, et cetera. Like our team is old school impact, and we all deeply believe in emissions reduction and decarbonization. However, again, like most of the customers of our portfolio companies are onboarding their solutions because of um, other value propositions that make it easier for them to get to market quickly.
Yeah.
So again, is this generating energy savings, um, or is it increasing, our margin profile or what have you? And again, like the decarb story is the icing on the cake.
Yeah. 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 It can't be the prime reason for making the investment if the unit economics, for example, don't make sense. Yeah. That's actually been an interesting learning for me, I think, as I've been segmenting out this wide world of, we'll call climate technologies and where we like to play. And the way I sort of think about it is really in three buckets. One is, you are cutting emissions or you're creating opportunities to reduce emissions based on better processes, better software, better data, so on. The second is, you know, catching emissions at the source. And this is something that one of our recent guests, Fred Lalonde, talked about, which is, you know, once it gets in the air, it is several orders of magnitude harder to then recapture that versus just capping it at the chimney stack
Right.
and understanding, okay, great. Now I'm at 300,000 parts per million versus 450,
Right.
right? That's the real differential.
Right.
And then obviously then we talked about direct air capture and those sort of things. And the further away you move from reduction, I think the more it becomes novel hardware and sort of more hardware based investment. I don't know
Yeah.
if you've seen the
Yeah.
same.
Yeah. No, it's interesting that you frame it that way. So we're in a company called Electric Era.
Hmm.
Really interesting EV infrastructure company started by a bunch of former SpaceX alums. So like
Hmm.
the lead mechanical engineer for Starlink started this company, which is storage integrated EV fast charge infrastructure.
Yeah.
And again, coming kind of back to the what is the value proposition. So the notion really is that if you're looking at level 3 fast charge infrastructure, and you don't have the right connection from the utility, now you're in their connection queue. It could be years before you get that. It could be really expensive. So essentially, what these guys do is they use an off-the-shelf battery, along again with some really sophisticated software that they've built. And what that allows you to do is to avoid having to upgrade your grid connection. Then you can start to do some really interesting things with the battery. So not only can you avoid demand charges, you can also start to do backup power, which for a lot of their initial customers, which are gas stations and convenience stores, is actually like there's real benefit in
Yeah.
that. Plus the fact that they're helping them avoid this existential issue of not being able to offer electric vehicle, charging in a
Yep.
place where, that's traditionally been a center for refueling. So, I think we really, again, like we like that approach where, you know, there's no novel hardware. Again, it is off the shelf batteries. They've really figured out kind of the supply chain for, securing that storage. But again, what they've really focused on is a software that allows above the grid limit charging so they can satisfy all of that demand and start to do some interesting things with the battery along the way.
It's so interesting that we've come back around to the fact that this is all a workaround to get past limitations of our current grid system and how utilities work. I don't know. I mean, it's funny to me how many billion-dollar businesses could be created just by the facet of we are trying to end around the current grid limitations.
Yeah, I mean, again, unfortunately, um, it's true. We've just not, made the political or social decision, I think, to invest in, you know, transmission and distribution in the way that is required by, our climate reality.
Yeah.
And I think there's a lot of, you know, certainly customer demand for, distributed energy resources. There's obviously a real economic case to be made in investing in solar.
Mhm.
And I think that, in many ways, like the cat's out of the bag on that, that trend only increases over time.
Yeah.
Um, but fundamentally, I think we are dealing with the world as it is, right? So our investments in, supply chain, like we're in a company called ISO, which is this collaborative performance management software for shippers and carriers. And that's about understanding, like, you know, are people actually doing what they're supposed to be doing? And
Mhm.
providing, again, kind of a single source of truth for that industry. It's not trying to reinvent the supply chain from scratch.
Yeah.
Um, so yeah, I think you're right. It is, dealing with the energy system as it is, dealing with the built environment and kind of construction industry as it is, dealing with the transportation industry as it is. And again, these are industries in flux, and there's a whole lot of change. And I think that the good news is that there's a lot of receptivity from incumbents, um, to start to onboard some new solutions again that are going to improve operational efficiency, that are going to improve labor productivity, et
Yeah.
cetera. I mean, utilities is a great example of this, where you have like this aging workforce, and so to the extent that you can provide people who are, on the front line superpowers to reduce the time that they're spending on manual paperwork, for example, there's a real value proposition there.
Yeah.
We have a company in the portfolio called Datch. Exactly what they do. They use voice AI for frontline deskless workers. They're working here with Con Edison to
Mhm.
provide, this solution for emergency responders from Con Edison, so that they can actually speak into their phone. The app takes this unstructured data, turns it into structured data, then speaks to, their ERP, their back end system. And again, like, there is a real value in that, particularly again for a workforce that is shrinking over time, and that's being asked to do more.
Yeah. Do you think about the IRA as a serious tailwind for the companies at the stage that you invest in? Or because I've heard differing factors where it's like, look, by the time this money trickles down from the incumbents who can actually access these tax credits to the startups, you're probably not a startup anymore. You're probably a late stage company. I've heard other folks say that no, actually, the receptiveness of my customers has gone up significantly because of the IRA. So I'm curious, given that you've spent time on the public side, obviously now I've spent a lot of time with startups yeah, as an investor. Where do you see the IRA fit in as a tailwind for these companies?
Yeah, it's interesting because was it uh, was it Albert from USV who basically said, last week, like,
Yeah,
the IRA is nice, but it's not a panacea. I think
yeah.
I'm diplomatically paraphrasing
I'm going to have him on the
what
show
he
at some
said.
point, so he'll get to tell me that directly himself.
But when I was at NYSERDA, and I work with Richard Kaufman again, who's now the chair of Generate Capital. Richard, I think, had this great phrase where he used to say, investors want TLC, they want transparency, longevity, and certainty.
Hmm.
And I think in many ways, like, that's what the IRA provides, right? Transparency, longevity, and certainty with respect to, is there going to be a market, for these big industries? And I think you see that in the construction of, energy storage facilities in the Rust Belt. I think you see it in, the state NEVI plans. You have 50 states now with, like, concrete plans to roll out electric vehicle charging infrastructure. I do think that a lot of the IRA money will ultimately go to very large companies who will then sub with some of the earlier stage startups. So probably unlikely that some of those, very early stage companies are going to be a prime
Yeah.
on a big multi-billion-dollar project. But I do think that again, this is kind of on a state by state basis that a lot of the agencies who are in charge of dispersing that capital are starting to look at what are the most cost efficient, future proof solutions that are out there that again also have a robust supply chain that have real deployments, et cetera. So
Yeah.
no, I mean, I think it moves the needle, right? Is it, it's like it's necessary, probably not sufficient.
Yeah. I like to think of it like if your business cannot exist without some kind of subsidy, then it probably can't exist.
Great point.
And I
Yeah.
think that's where I push back sometimes on a founder that's like, well, look, because of the IRA,
Right.
we're going to be able to, reach our Series A milestones. And I say, why? I don't want to hear that because if it wasn't for the IRA,
Right.
would you not be able to reach your milestones? Because that's most likely what's going to happen. And I think, just more advice for founders who listen to the show is like, look, those things should be kind of wind in your sails, but it shouldn't be the thing that gets you started ultimately.
Yeah, complete or that you're entirely reliant on
Yeah.
to make a business case,
Yeah. Yeah.
right? Like, I
Right.
think you're right, and we also tend to shy away from businesses that are entirely subsidy dependent.
Yeah. Yeah. Those change with every administration, right? Who knows what's going to happen next election year? Couple things I want to close with you on. So one is you've spent time looking at these. Again, we call them legacy industries. You guys, call them what you do. Is there something that you've seen, I guess, that's changed your perspective over the time working with companies in this space? Like, is there something you believe now about these legacy industries that maybe you didn't when you got started investing in these companies?
Um, we have been spending a lot of time on the AI macro in the fund. I think we've centered on this notion of um, the importance of the foundational data asset
Okay.
and really kind of controlling that. Like as a startup within the space, I think it's been really interesting to see, again, like how companies are looking to kind of lever their own data. Again, whether it's for operational improvements or supply chain resiliency or what have you. So, just as a for example, we're in a company called Circuit Mind, super cool company that's using generative AI to design circuit boards,
Hmm.
which has historically been a very time consuming process,
And
right?
manual, right?
Very manual,
Yeah.
right? Which component, et cetera. It turns out that like if you have the right data sets and you are able to kind of configure them in the right way, not only will you end up with chips that are in circuit boards that are like 25% more power efficient, but you can also tap into a more resilient supply chain
Mm,
and you can get these things to market much, much faster,
yeah.
which again are really important for things like electric vehicles or DERs, it's like broadly.
Yeah.
And that notion of kind of being able to control like that foundational data asset, I think has is something that um, that over time I've appreciated more. And if you think about it, almost like a business intelligence tool, like there are wedges in, and then certain things that customers can begin to do with that product that
Yep.
maybe were unanticipated. And so I think, again, like there's been so much talk, from a smart, like whatever it was a decade ago, the first smart cities wave, right? About data and who kind of controls the data,
IoT was a big thing for those smart
privacy,
cities.
et cetera, et
Yeah.
cetera.
Yeah.
And in some ways, like, again, that doesn't change, right? It's a question of like how are incumbents kind of using that data. And then again, like as a startup, are you building something that's easily commoditized? Or again, like, can you control something, that that you can really kind of lever and get paid to
Yeah.
to build
Yeah,
for.
yeah, yeah. It exists as a moat, but it also allows you to solve deeper customer problems once you've kind of, really latched on initially. So I like that answer a lot. Sure, one of the things we've chatted about, I've been really excited about micromobility as a category, and then obviously mentioned that, Revel started as a micromobility company, has now moved into urban electrification. Talk to me about your excitement for what micromobility looks like and kind of the future of cities around micromobility over the next decade.
Yeah, huge Revel fan,
Glad to hear
and
it.
yep, and I do think that that's one of the things about micromobility that's underappreciated is just how much fun it is, right? And in an age where we're also glued to our phones and screens, like to actually hop on a Revel scooter or have that Revel experience, I think is somewhat differentiated. But we're also, I think, at a really interesting time within the space where, with the bankruptcy of Van Moof, and then some of the decisions that you've seen in places like Paris to kind of ban shared e-scooters or what have you. Like we are now entering this next chapter of what micromobility actually is. And I think that you have to believe that short trips, like the trips that are less than, whatever, 3 miles,
Hmm.
continuing share of that is going to be driven by electric micromobility.
Yeah.
Fundamentally, that is a good thing from an emissions perspective. Probably also a really good thing from a safety perspective. Absolutely a good thing from a traffic perspective. And so we invested in a company um, called Ride Panda, some veterans from the space like Lime and Scoot and Spin, who started a company to provide micromobility as a service for large enterprises. So they work with Amazon, they work with Intuit, they work with a couple of counties to essentially provide a white label micromobility solution
Mm.
for their workforce
Oh, wow.
so that essentially they can take advantage of the pre-tax benefits that come essentially with a lease. And that lease is inclusive. So it is essentially everything that you're going to need when you are on your e-bike or a cargo e-bike or e-scooter or bicycle, whatever form factor you wind up choosing, including repair and maintenance. And it's month to month. So, maybe you want to try this e-bike like this month, but next month again, you're really interested in an e-cargo bike or what have you.
Yeah.
um, I think like that notion of kind of the enterprise go to market and the enterprise essentially as the customer and channel is super interesting. Like, given some of the return to work macros that we're going through now, the interest in like scope three emissions that some of these big enterprises have,
Yep.
the interest in kind of health and wellness programs for employees. Like, I do think that that notion of, again, kind of company or the public sector as the customer for micromobility to get folks like on their first e-bike, and then to again like take them along that electrification journey is super interesting. And the company is just seeing a huge amount of traction with people who want to have that experience in a way again where there's not a super long-term commitment. They don't actually own the bike or what have you. But they work with the company, like I say, really to optimize that
Yeah,
experience.
and what I really like about that is touches on a theme that comes up really often on our show, which is, it cannot be a green premium. Like there has to be a business reason or a community reason or whatever it is for folks to adopt this beyond the fact that hey, it feels good that it's electric, right? And
Right.
I think in this case, you talked about the return to office, giving people better alternatives to cut down on traffic, get them where they need to go faster. I mean, New York has obviously invested quite a bit in bike lanes.
Yep.
Other cities are following suit. I really like that it's speaking not just to obviously the need to electrify this vehicle and kind of mode of transportation, but also the fact that like it is addressing a real business need, and I think that's very very important for the founders that are building today to answer both sides of that equation.
Yeah. And I think it's a journey, right? Like, so for so many people, micromobility is a journey. Like, you have a lot of people who haven't been on a bike for years or what have you. And they're interested in, an e-scooter or what have you. But like, there's a certain fear factor in that. And, again, some of the challenges that we have around just in terms of um, the logistics of acquiring and servicing kind of some of these new models. Again, as Van Moof is proof, like they're tricky. So how do you deal with that in a way that ultimately provides the best customer experience? Like I think it's those companies who are going to win out at the end of the day.
I'll close with you where we close with a lot of our guests. Um, there's a lot of doom and gloom out there. Not everything from Climate Week last week was hopeful. I think some of the conversations you would have with folks, as you hinted at the top of our show, just shows you how far we really have to go. But amidst all of that, what is one thing that gives you hope and optimism in this fight against climate change?
Well, I think like in the enterprise space, confidence is the currency.
Mm.
And what I mean by that is like real projects with real ROI, with real scale, enable more of the same. And I think, you can look across again a number of sectors and find that now. Again, whether that is, um, stories around building electrification. Here in New York, we have this clean heat program where we have 10,000 heat pumps that are going into public housing. Um, or it's on kind of the renewable development side, or it's in, again, the massive kind of market that Tesla has kind of led the way for around electric vehicles, or even on the micromobility front, which is something we
Mm-hmm.
didn't talk about,
We
but
didn't, yeah.
like this next generation of micromobility, I think is something that I'm really excited about. Or LED retrofits. I mean, take your pick of um, examples across kind of the climate tech spectrum broadly. I think that you can find really replicable use cases with real like end value and ROI.
Yeah.
And I think probably, we as an industry need to do a better job at highlighting and sharing both those things and things that didn't necessarily work. But like I said, I do think that, across kind of asset owners and C-suite decision makers in, some of these really big industrial facilities, like confidence is the currency.
Yeah, yeah, I really love that answer for a couple reasons. One being, it speaks so deeply to the ethos of what VSC does, where we're helping our companies on storytelling and narrative, and ultimately, what I tell folks that you're really trying to do when you're selling an enterprise is shortcut to trust, right? These folks are looking at, you think of it like 100K ACV, but they're looking at it as a very important piece of their budget or their budget allocation, and especially when you have to get purchase at a level where they have to escalate it up the chain, right? Now that's not just like budget, but it's trust and reputation. And that's
Exactly.
somebody as a deal champion is putting their name on the line that, hey, this is the thing that our company, our factory, our plant needs. You have to shortcut the trust. And so I love that answer because I think it really speaks to the fact that the more ways that you can do that as a founder, the more ways that you can really demonstrate with case studies, with real examples, with customer referrals that you can do the thing that you are doing, the more, as you said, confidence becomes the currency. You're able to really instill confidence in your buyer.
Absolutely. And you're right, Jay. I mean, I think so much of this, like we like to layer jargon on top of, but at the end of the day, like it is fundamentally about human relationships and
Yeah.
trust.
Yeah. Yeah. Someone's got to put their name on the line for you, and you got to give them the confidence to do that. Micah, this has been a fantastic conversation, man. I'm looking forward to hopefully finding some opportunities to
Likewise.
co-invest together. We're fishing in the same pond. We're going to catch the same fish one day.
Look forward to
But
it.
I appreciate you joining me on the show. Thank you for
Thanks for
being on
having
Climb.
me.
Thank you. Well, that's it for this week's episode of Climb by VSC. Thank you so much for watching and listening. My thanks to Micah Kotch from Blackhorn Ventures for joining me on the show. Hey, did you know that you can watch as well as listen to episodes of Climb? Check us out on YouTube for full video of this episode, as well as on Spotify and iTunes, where you can listen to us every week. Also, check out our socials for clips that we release from the show each week. If you like the show, please leave us a 5-star review. If you love the show, we'd love to hear suggestions for guests that we should have on next week. That's all for now. We'll see you next week on Climb by VSC.